Hello, ladies. Welcome to A Woman's Heart, where we uplift, motivate, encourage, and empower women. We are glad that you are joining us on tonight. Make sure you follow us on all of our social media outlets. That is Facebook, Instagram, Twitter, Tumblr, and please do subscribe to our YouTube channel. And also, ladies, make sure you ask your questions and leave some comments. Join in on the conversation. You are here to be a part of this sisterhood. All right, we'll be on shortly. Check out the website toawomansheart.com. Stay tuned. We're coming up next. Well, hello, everybody. Hello, everybody. Hello, everybody. Welcome to another episode of To a Woman's Heart, where we uplift, motivate, encourage, and empower women. So, I want to say this to everybody that's listening tonight. We're on an educational adventure, and we're going to be educating women on a lot of things. And I know some of us been living our life a long time, but there are some things that we're just not familiar with. And tonight we're going to be talking about insurance. And the main thing about that, we don't want nobody to be in a position where they have to pass the cup and make a collection plate. So we want you to understand your choices. We want you to know that there are choices out here for you, and we want to be able to assist you in making the proper choices. So Renee, I'm going to introduce the ladies who's going to be on tonight, who's going to fill us up with so much information that you can make the adequate decision that you need to make for yourself and your family. All right, ladies, introduce yourself.
Hi, I'm Tammy. I am a senior representative representing Primerica, where we specialize in making sure that families are properly protected by way of life insurance, mutual funds, investments, all thing money, saving you money, protecting your money. That's what we deal with.
Hello, yes. Just like Tammy said, we are definitely here to protect and save you money and show you how to build money. I am Rochelle. I am a regional leader at Primerica. Love this amazing company because they have shown me how to really put my money and into my future and save. So we are excited to be talking to you guys tonight about insurance and investments and things like that. And man, we want you guys to, ask a bunch of questions. So that's why we're here.
Okay. So we're going to start with doing some screen shares so we can understand where we're going. And so Tammy is going to be the navigator, the driver of our conversation tonight. So Tammy, take it away and talk us through this.
All right. I like to let people know, first of all, the company that I work for and that I believe so wholeheartedly in. I have stock in this company and I'm invested in this company. So again, I represent Primerica. Primerica has over 126,000 licensed representatives, I myself being one of them. Definitely a valuable company listed on the New York Stock Exchange and has been in business since 1977. So it's not a company that's a fly by night company, not a company that's just started getting their feet wet. This company has been in business for many, many years. And if any of you out there are familiar with Citibank or Citigroup, Citigroup and Primerica were partner companies many, many years ago, 1977. But Primerica pretty much did a lot of business and made a lot of investments, and they were able to kind of not separate ways in a good way, separate themselves from Citibank and stand on their own. So that's the company that I represent. A lot of people ask, like, what company do you work for? There's so many companies that deal in life insurance. You've got Allstate, you've got State Farm, you've got, a bunch of different companies out there. Primerica right now is one of the leading companies in investments, mutual funds, and life insurance policies.
Okay. Well, I didn't know that Primerica was a part of Citibank, so I've learned something tonight. I thought Primerica sat by itself, so that's something I was not aware of. But thank you for letting us know that. And ladies, make sure you ask your questions. No question is a dumb question. I'm just saying, when you don't know and you're unsure of some information, just ask the question. It can be very beneficial to you in making your choices when you're choosing your insurances.
Absolutely. And I'm learning that the more I sit and have these types of discussions with people, it's a lot of things that they don't know because again, we don't ask and no one teaches us about this. We don't learn this, right? Our parents oftentimes didn't necessarily have policies, so nobody knew this information. So it's always good to ask, make the best decision that works for you and your family, but I'd rather you know and have the knowledge and make that decision versus making an assumption and now you're not protected.
And I want to add to your comment. I want to say this too, because I realize that some of us are embarrassed and we don't want to ask the question. We're fearful that somebody may judge us because we don't know. There is no person on this, there is no one on this earth that knows everything. And everybody has a teachable moment.
Yeah.
And when you need to learn something, you need to know something that's going to be beneficial to your life or how it's going to help your household, whether it's take care of your credit, your life insurance, or budgeting your money. This is what we're here for. So you can know you don't have to sit in silence and suffer by yourself and like you don't know what the answers is to the question that you have. So this is an opportunity to ask those questions that will help you make the best decision for you. And we hope that you would take this opportunity and use it so it will help you to make the best decision. All right, Tammy. So where are we going to next? I am the driver.
Okay, I wanted to piggyback on you, Miss Renee. You are absolutely right. You definitely want to um, make sure you ask the questions because before I absolutely joined Primerica in business, I was a client, but before then I wasn't. Right, 4 kids, a minimum amount of life insurance. Right, I was going down the creek. It would never been enough.
Yeah.
So I had to get educated as well. So I always tell myself I'm a student in every room. So you can always learn from someone in the room. So yes, this information is definitely valuable to our well-being and to our kids' well-being as well.
Absolutely.
Yes.
Absolutely. So I guess let's jump right on in. Let's talk about insurance. Some of the heaviest questions, or I would say the most popular questions that I get is, why do I need life insurance? Why do I need life insurance? I don't know if you've ever been asked that, Rochelle, but lately people have been asking. So why do I need life insurance?
Yeah.
Talk
I,
about it.
yeah, I would say on so many levels you need life insurance. Let's take a couple of examples, right? You take a married couple, okay? Just say no life insurance. No coverage on them whatsoever far as life goes if one pass away. So husband and wife, 2 kids, okay? Husband is working, wife is working. They doing well. They bringing in a joint amount of income, correct?
Mm-hmm.
So their both income is driving that household. Okay. So God forbid the husband pass away prematurely. Okay. So that leave the wife and her 2 kids. And now the husband income is completely gone. Right. So what do the wife do? She got to pick up the husband's slack somewhere. And now she have no extra support, no financial extra support. So now she may have to go and work 2 extra jobs, maybe not being there with the 2 kids. So first of all, insurance is an income replacement.
Yes.
Okay. It's an income replacement because if the wife leave and the husband have to take care of everything, he done lost the wife entire salary.
The deficit.
Yes. So number one is a income replacement. Okay, just say you making a ton of money. Okay, and you have it like that. Okay, the insurance number two, or just say you're not making enough money. Okay, insurance number two, you don't have enough to bury your loved ones.
Yes.
Okay, you live in life, all the money you coming in is going right back out the door the same day. Okay, so nothing is being saved and you don't have a life insurance policy. Now, listen, the individual passed prematurely, you have nothing.
Yes.
Okay, so number two is to protect the burial and the well-being. I mean, the well-being and the cost of that person that passed away. Because if you don't have 10 or 20, 30,000 sitting in your bank account, you need life insurance
Yeah, that's a
until you grow your income and have enough sitting in your account where you don't even need to pay anybody anything because now you are financially independent. You don't have to ask anyone for a penny. And that's what we want everyone to be at or striving for.
Absolutely. I think it's the worst thing ever to have to suffer a loss of a loved one, a family member, or a friend. But now you can't even grieve because now you have to be focused on how do I put them at rest, right?
Yeah.
You don't want your family member, your loved one sitting in a morgue for
Mhm.
weeks and months, on end while you gather up the funds to put them away properly. So it definitely is beneficial for that. You don't want to have to stress in that time. You want bereavement. You want to be able to grieve the loss of your loved one without thinking about the financial aspect of it so much. So leave your families something to put you away peacefully. Another point that I make when I'm sitting down with clients is related to the income replacement. Let's say you have a house. You can be a single
Yeah.
person and own property, or you can be a married couple and own property. Do you want your house to be paid off in the event that you leave here earlier than you plan? Because it's not your plan, right? In the event that you leave here, leave enough to pay off your home. That way you can leave it to your family. That's one less bill or mortgage or, that they have to worry about. Leave enough to cover that. Leave enough to leave, something set up for your children's if you want to pay for their college tuition so that they don't have to take out loans. Factor that in. There's a ton of different ways that you can put your policy together based on your need and what you want to leave behind for your family. Most people think, oh, I got enough where I just want to be cremated. Somebody did actually tell me that. Let them
Oh.
cremate. Yeah, I don't want to be a stress or a burden. Let them just cremate me. But that costs a little bit of money too, right? Nothing is free. It costs
Yeah.
money for them to burn you up.
Mhm.
You got to have a nice urn to leave for your family. And
Yeah.
still, what do you want to leave behind for your children, right?
Yeah.
We're conditioned to leave our children debt. Don't leave your children debt. Set them up for success. And in your absence, this is the best way that you can absolutely do that for them.
Okay,
Yeah.
so then I have a question.
Mhm.
Because I don't think people really sit down and they think about, they think, well, I don't want to get a life insurance policy because I don't want to leave nobody my money.
Mhm.
But they're not thinking about that those individuals that you leave behind will be affected.
Yeah.
And you want to, I say, it's taking away the stresses out of your life. It may not fix everything, but it gives you an opportunity to breathe a little bit until you can see your way a little bit clear. It's not going to fix everything, but it will provide you a little cushion.
Yes.
But at the same time, if you don't get educated on it and you don't understand it, then you don't realize how beneficial that life insurance policy is. And then something else always comes up is that individual who borrows off those policies.
Yeah.
And then they borrow so much that when it comes time to use the policy, there is nothing left.
Yeah, that is very true. So that's actually a very good point too, because there are several different types of policies that one could get. And that's actually another question that I get asked. Like, well, I thought a whole life policy was better. Or no, term life policy is better. There's a couple of different options that you can go, again, based on your needs. Most companies do push whole life policies. Primerica does specialize in term life policies. And there's a couple of differences. With a whole life policy, think of it as what we call a death benefit, meaning what your beneficiary gets to, bury you or based on whatever type of policy you leave. Let's say, for example, you leave them $100,000, right? You have a policy for $100,000 and that is your death benefit. In a whole life policy, it builds up cash value. The more payments you make month over month, it's going to build up a little bit of cash value. So let's say maybe $50,000. So now that total policy is worth $150,000. $100,000 is your death benefit. $50,000 is your cash benefit. You're allowed to borrow from that cash benefit. I'm not sure why, there may be a need, an emergency that comes up, and maybe you need the cash and you can borrow from your cash benefit. However, when you borrow from that cash benefit, you almost end up paying back double because it's a loan. You're borrowing. You're not cashing out and taking the money and you scot free with your 50 grand. You're borrowing that money from yourself or from the company, not necessarily yourself, from the company, which means there are withdrawal fees, there's taxes, there's penalties, and you have to pay that money back. So by the time you end up paying that money back, you've borrowed double, right? You're paying back double than what you borrow. In the event that you die or you pass away before you pay that back, that money is deducted from your death benefit, which means your beneficiary doesn't get that $100,000 anymore. They're probably getting about 40 or 50, depending on how much you borrowed and how many fees and penalties. So think about it that way. You're paying for two things. You're paying for a death benefit and a savings. But in the event that you die or borrow from that policy, your beneficiary only gets what's left, the remainder of that. So I say definitely make sure that, when you're making a decision as to what's best for you, think about it that way. Whole life policies tend to be a little bit more expensive month over month because they have that cash value building up. And they do cover you typically until you're about 99 years of age, right? Term life policies is only for a shorter period of time. You can do 25 years, 35 years, 45 years based on your age. At the end of that term, you're able to renew your policy if you choose, or you can go another route and take your money and now start investing it and making your money work for you, which is where we push the mutual funds. Highly suggested, because that way your money works for you. So again, there's a ton of different options. I'm not here to knock either option, because you do have to be informed and make the decision at what works best for you and your family. Maybe you do anticipate having a need and having to borrow from a policy and you want to go the whole life route. My job is to educate you on what those options look like. You tell me what you think would work best for you, and we can make an informed decision together.
Okay, so here's another question. So term goes, you can determine how far you want to go in your term, 20, 30, 40 years. And then after those 40 years expire, you can renew it and get another term.
Correct.
But if you get a whole life, I'm asking the question. So if you get insurance whole life, you're in your 50s. So it increases the older you get for whole life, correct?
Yes.
Correct.
So if your term expires after your 20 or 30 years and you renew it, is it more expensive or is it cheaper?
It's based on your age at the time of renewal, right? Because your premium, what you call your monthly payment, your premium is based on a couple of different factors: your age, your health, and your lifestyle. So the younger you are, typically the cheaper your policy will be. You're young, in your 20s and your 30s, and you're in good health, not smoking or anything like that, not living a risque lifestyle, jumping out of planes and things like that. You typically can get a pretty affordable policy, right? Cheap policy. If you're a little older, maybe you smoke, maybe you have some health issues, high blood pressure, we're not going to deny you necessarily. We'll still take the information and review it, but your premium may be a little bit more. Maybe your premium is $40 or $50 a month, right? So the older you get, the cost premium does increase a little bit, because again, as we get older and we age, our health starts to decline for the most part if you're not living a healthy lifestyle. So the why behind the increasing premiums as you get older.
So it's best to get an insurance policy at an early age versus a later age. And it's also best to not let your policies expire.
Yes, absolutely. I mean, definitely recommend it. But again, what I'm finding now is a lot of people, and myself included, in my 20s, I didn't think about life insurance. I didn't get a policy until I was probably about 27 or 28. Still in my 20s, but definitely not. It was different as compared to what it would have been if I was 22 or 25, right? But yeah, a lot of people don't think about insurance, not educated about, properly protecting themselves in their 20s. So now the majority of the people that I'm sitting down with are in their 30s and 40s and still able to get fairly reasonable policies. You can get a policy for about, $30 a month. Really, that's not a lot of money if you think about it, to protect your life. You're paying money to protect your car. You pay money to protect your home. Why not pay to protect your life?
Yeah, definitely good. I wanted to piggyback on that. So for the term, the reason we do term, because as you said, Tammy, it is cheaper the younger you get. So the younger you are, so you locking that rate in for 35 years, and that
Mhm.
rate is not going anywhere. That monthly payment will consistently be the same.
Yeah.
That's one thing different about a whole life. As you get older, your policy will increase in that whole life in that whole life policy. Most policies is every 5 years you will see an increase in your premium, and that's due to you don't have an ending date. They can't lock in a rate because it's like a variable rate, right? It fluctuates with the world. So as that term life coming to an end, yes, you can automatically renew at the age of 70, 75, 80. It will increase because now you're older. But the good thing about Primerica, you don't have to go in to any medical facility. You don't have to, it's as is, right? So we already have you on the books. It may be a little bit higher, but remember, we putting you in an investment vehicle. Right? We're not giving you a term policy without putting you some type of financial protection alongside of that. Okay. So now you're going to be in a mutual fund. So you agree to do a 20-year term or 25-year term. Now you're going to lock in some investments for about 25 years as well. Okay. But in the meantime, as that money grow, you can start using that money. You'll have to sell some stocks and things like that, but you will not have to take it out as a loan. That's one thing. Or you could continue to allow that money to grow. That money do not hinder your insurance policy. They're two separate entities. So
Yeah.
you cut out that insurance policy, you stop paying that insurance policy, you still got an investment vehicle that's working for you that you can lead back towards your kids. Okay.
And with the investment vehicle, think of it as a savings account on steroids. I wouldn't even look at it as a savings account,
Yeah.
really. Savings account, like, what is the savings account? I'm saving money, but I'm not making any money off of what's in that account. With a mutual fund, you can actually earn anywhere from about 10 to 12, 13% interest on the money that you're putting aside. So that's
Mm-hmm.
what I like to call making your money work for you. You take a set amount of money, you put it in there, and you watch it grow, because that's what it does. When you want to take from it, again, you don't borrow from it. It's your money. You can sell some stocks, move it around, and do what it is that you like to do with that money.
So you can determine how much money you want to put into a mutual fund.
Yeah.
What's the lowest amount that you can put into? Because I know some areas you have the minimum amount you can put into a fund. So what's the minimum amount you can put into a mutual fund?
So with the mutual fund here at Primerica, it's only $25 because we serve the middle income families like myself, right? Definitely building up my income to have some wealth, but until then, I need to be able to know that I can invest alongside of that person that's investing 10,000. And that's what we
Right.
do here at Primerica. So the minimum is only $25 to get you into an investment portfolio. Now you're in a position to
Hmm.
see your money grow, and now add to that as you see that money moving for you.
Right. So when the money goes into the mutual fund, how do you know if your investment? I mean, do Primerica show you what the money is being invested in, or do you pick
Mhm.
what's being invested in? How does that work?
Great question. So you do sit down with a licensed advisor. My coach, her name is Demira Bolden. I'm going to say her husband name. They are fully licensed, so they sit down with you and they come up with a strategy for your financial game plan. So are you looking for something to go long term? Okay, 20, 20, 30 years, 35 years. Or are you looking for something I just want to invest for a good 10 years? I want to see if I put this X amount of money in here. What will my return be? And you guys kind of solidify a financial game plan.
Hmm.
I have several things going on in my life. I do have an emergency plan. And that's where you have anywhere between 3 to 6 months of savings. Most likely or usually that's kind of like a money market account. You earning a little bit more interest than the savings, but you can actually go into that and you can touch it. Okay. And you want to have 3 to 6 months because what if the emergency happen? You want to be able to go on your account and be able to a car breaks down or something happen major in your home. You want to be able to go to that account, still earning a good enough interest, but now you can use it. Okay. Then I have maybe like a short term where I know my daughter is going to college now. As she gets to that college age, I'll be able to use some of that money to help her go to college.
Hmm.
Now, I'm a business owner. I do not work a 9 to 5, so I don't have a 401k. So now I have an IRA. Okay. Now that is my That is my retirement. I cannot touch that. I cannot go with that. If I do, listen, it's gonna be some penalties that I will have to pay. So you kind of set your game plan up for life, because life do hit you every which way. So you try to have those things put in place.
Yeah.
Okay, so
And you,
IRAs get penalties. They have penalties.
if
So
you get, yeah,
that's good for long term with
yes,
you
yes,
building. So your IRA is pretty much like your 401k that you don't want to touch it.
that you
Yes.
don't want to touch. Yes, and that's
Okay.
why the emergency funds or the money market would be suitable for someone who's looking to go in and out, not often, but maybe once a year. Okay, I
Okay.
want to go in, maybe I want to pull a lump sum out, but I won't have access. I need this, I need this, right? But then you set up a couple of more avenues where you be disciplined. You have to be
Hmm.
disciplined, or you will never say, you
Mhm.
know. So you have something that teaches you discipline, because when you set up a long term, you can't touch it. Now you're in a position where you're going to be paying more to get it out. So you make sure you have that discipline to keep up with your retirement.
So
Yeah.
what's the maximum amount that you can pull out for a mutual fund if you needed the money, or is there amount at all?
That's well, actually, it's not amount, because you can close your account anytime for one.
Hmm.
Okay, so you
Okay.
can close that bad boy. Say I want to take it all out, and you completely deplete it and stop whatever contribution that you got going
Hmm.
on in there.
Hmm.
However, it is a lot of factors that play along with that. So, are you trending to retirement age, and you may not have as much penalties as me? I'm young, you know, or you may be a young person, and um you want to pull out. So now your penalties is large, because you have not given it a time to work for you or to work on your behalf, and you cutting it short. So it do depends on how long you done had your portfolio, how old you are, what type of plan you put together when you first sat down, and things
Hmm.
like that. So it's not a straightforward person to person. It depends on what you set up in the beginning, and now how far into it are you?
Okay, so can you explain to the people, because a lot of people don't really understand when you say
Mhm.
penalties,
Yeah.
when you pull out money that is going to cost you extra. Yeah.
Yeah.
So please
Yeah.
explain penalties to
Um,
everybody.
so most vehicles, when investments or 401k plans, as we know, if you are under the age of 59 and a half, and you want to tap into it and start looking good to you, you just want to use it. Hey, it's some couple of things that play in that. Some taxes that you have to pay. I can't quote the rate, because it may be different now, but it used to be, I think,
10%.
10%.
Hmm.
Then you paying like a 20% because you're not 59 and a half, right? Now you're taking an early contribution. It's a small penalty in there. And then the taxes that you got to pay right then and there when you pull it out. And then when you file your taxes at the end of the year. So, hey, it's you don't walk away with nothing.
So is there, like, you name just about three different vehicles that
Yeah.
will hit your pockets? Because I
Yeah.
want people to understand. People
Yeah.
think it's easy to get into things, and then I
Mm-hmm.
can, build my money up and I can take it out when I want to, because their mindset is it's my money.
Yeah.
But they don't understand that your government, even though it's your money, your
Well,
government is requiring you to give some of that money up
Yeah.
for saving your money. So
Mm-hmm.
I don't want nobody to leave here thinking that if I invest in a mutual fund, I invest in an RMA, if I invest in the 401k, if I invest in money market, that when I feel like taking my money out, then I'm gonna get all my money. Because when tax time comes and your tax preparer
Yeah.
tells you this is how much taxes you have to pay, I don't want nobody to be mad, upset, or angry. I want
Yeah.
everybody to be clear on the directions of penalties,
yes.
because penalties hit hard when you don't understand.
Yes.
Yes, they do. Yes, they do. And that's the good thing about Primerica. All our advisors have to go through a rigorous training to really sit down and educate our community, our people that's close to us, on what's the right decision, what's the best investment for you. And we get an understanding of our customers, our client. You don't put a 65-year-old woman and a 65-year-old man in a 401k plan. No, why would he need that, or why would she need that? Right? You got to make sense for the client. maybe that 60-year-old maybe want a short 15-year investment and want to earn a couple of $1,000s. You put them in that and they know they may be taking on a little risk in the market, but they know what they're there for, you know. So you got to know, and we do some lot of teaching and training and getting those credentials so we can know and identify and really educate you on your financial game plan. What do you want your game plan to look like? How do you want to live, right? How much money you want to have at the end of your retirement or through the process of you being retired. So what do that look like, paying off your home? So we really sit you down and see what do things look like for you.
Yeah. I think it goes back to the comment that you made initially too, Rochelle. It's about being disciplined,
Yeah.
and conditioning yourself to, again, make your money work for you. We don't
Yeah.
want to continue the cycle of robbing Peter to pay Paul or living from check to check. Learn how to put a little bit aside. It takes absolutely minimal peanuts to put something aside and just
Yeah.
to grow. Put it like I do. Put it aside and forget about it. Like I don't look at it as much. I used to be looking at it, how much money I'm making, how much money, how much interest I'm making, how much money. But then I do get anxious. Ooh, I can take it out and do this. So now I delete the app.
Yeah.
Let it do what it's gonna do. I know that it's growing. I check it every now and again, but I forget about it. And I know that in the event that something drastic happened and there was a need for my money outside of the initial need that I started it for, then I have it there. I actually sat down with a young lady a couple of weeks ago who had a life insurance policy but had let the policy lapse. She stopped paying on it. She did, however, have mutual funds set up. When the pandemic started, I want to say I think she said mid last year, either mid last year or somewhere toward the end of the year, she actually got laid off because of COVID.
Oh.
She got laid off. She got unemployment for a little bit, but that, she said, didn't last long. And she was like, I remembered I have these mutual funds. I had these mutual funds set up as a vehicle for myself to save money in the event that something happened. Now something has happened. I don't have a job anymore. Unemployment. I can't continue to ride unemployment, and my family still needs to eat. So,
Yes.
and she was grateful. And I'm like, you know what? That's actually a great story. She honestly she knew that she had mutual funds, but she wasn't banking on that money. She was banking
Right.
on keeping her job, right?
Yeah.
It didn't work out, and she actually had something to fall back on. So I'm like, do you magnify you? That's the testimonial right there, right? That's the perfect reason why you would want to go and cash out. You know, it's an emergency. It's an emergency situation.
But a lot of people don't believe that life happens. Life happens to everybody. It may not be in loss of job. It may be getting sick. It may be whatever it may be. You don't know. Life happens to everybody. And here is my thing for us as a race of people. We think that if we can invest, I said this, we can invest in Jordans. We can invest in $500 for weave. We can invest in some Western red bottoms that Tamika wear, and we can't afford to buy a popsicle the next day.
Absolutely.
We can spend $300 on Beyonce concert tickets. Then we should have the mindset to take some of the money that we just blow and waste and invest it.
Yeah.
And we would be so much further than what we are, and we will have so much more, but not only ourselves but our families.
Yes.
We have to stress. We won't have to be at the point of suicide because of my financial stresses and strain, but we need to open our mindset to listen and to absorb what's being told to us, and not thinking that anybody trying to tell us what to do with our life is just a guide. It's something to empower you to live better. So you don't have to stress later on, because I'm 60. So what I'm learning, I didn't get that. Because my parents didn't know that information. And so I'm already behind the 8 ball. You follow what I'm saying? And so this vehicle here is to help others so they won't be behind the 8 ball.
Absolutely.
Yeah.
Absolutely.
Simple as that.
Yeah.
And then educate you on what options are.
The piggyback on what Tammy was saying, and she pretty much said out of sight, out of mind. And the great thing about Primerica, we can set up anyone with an insurance policy, give them a quote and protect them, but also have a savings component where now it's tied into their insurance policy where they're saving. In a couple of months, we pretty much call that client back. Hey, you got $150 here. Let's move your money into a mutual fund. So what we do, we help individuals, middle income families, because this is how I learned, right? They put $20 on alongside of my insurance policy, right? 6, 7 months, they call me. You got $100 right here. Let me come on into my office. I'm gonna set you up with a mutual fund. It was out of sight, out of mind. I forgot they even told me. So now I was at the position. I got $100. I'm gonna start a financial portfolio. Let's go. So that get our clients to the point where they didn't even know that they were saving. And if we can do that when we sit down with our people, now we put them in a position where now they see that they can do it.
Yeah.
So yeah.
So Rochelle, I have a question because a lot of people are into cryptocurrency and Bitcoin and investing in stocks in that way, right?
Mm-hmm.
How would you compare investing in a mutual fund to something like that, like Bitcoin or the cryptocurrency trend?
Yeah. To each his own. I have not really learned a lot about the crypto, the Bitcoins or whatever. I don't even know how to say it, right? But I know just from studying and learning about investment is not on the stock market. You cannot track it. It's a commodity, right? And investments is not a commodity. So you got to understand what you putting your money into, and if you don't know what it is, how could you know what type of return you're going to get back on it?
Yeah, I think my thought on it is just based on the research that I've done is it is inconsistent. You have some highs, lows.
Mm-hmm.
It's a stock, right? Depending on how well it's going, versus a mutual fund that is a little bit more consistent. You do have licensed and trained professionals that know where to place your money, and when that is on a decline, they're going to move your money into what's on the uprise, right?
What I take about Bitcoins and cryptocurrency is it's like a fad.
Yeah.
Right. What are
it's a fad. And right now it's an exciting thing. It's a quick way to make money.
How do you cash it out, y'all?
But if you don't know how, because I've been approached about cryptocurrency and Bitcoins.
Really?
And this before it even got popular. Somebody approached me, a friend of mine approached me about it. But here's my thing. If it don't solidify some longevity, then I'm not going. I'm not biting. I'm not chewing. I'm not even trying to digest it. You understand what I'm saying? Because it's not a sure thing. And right now, the hype is to get as many people on Bitcoin and cryptocurrency as possible, because if they can get you to buy in, then that helps to push the money along. But what happens when the land dries up? The last person in is going to be stuck without. You follow what I'm saying? So I'm not going to go that direction. I'm going to go in a direction where I know, they've got some longevity and somebody got some experience in this thing.
Mm-hmm.
Because when your money's gone, it's gone.
It's gone.
I feel like if you're going to invest, if you're going to take your hard-earned money and put it aside and make it work for you, you definitely want to think about doing something that's stable, right? Not necessarily a fly-by-night, not that's going to be up one day or up for 2 days and then crashes and now you're at a loss. Definitely consider doing something that's a little bit more stable. So do your research. And that's why we do have trained and licensed professionals who've done the work, who've taken the time to study and educate themselves to help educate you in making that best decision. We're only here as a vehicle for you to make sure that you're making the best decision. We're not here to twist your arm into one thing or the other, but at least we're here to help to educate you in making the best decision for yourself.
And I'm going to throw something in there because it happens a lot. There are a lot of companies out here who say they represent you in totality. You help you with your needs and make sure they empower you. But you have to do your research. You have to understand. You need to listen and then go back. If you're unsure, ask questions. Because there's a lot of individuals out here who has gotten duped when it comes to insurance. We know when we get to a certain age, things change. It's just a fact. They change. They change.
Yeah.
Period. So don't have nobody telling you, okay, I'm 55, I can get a whole life insurance. Your life is already gone.
Oh,
You understand what I'm saying? It's no longer whole life. Whole life starts when the doctor say it's a girl or it's a boy. That's when whole life starts. And
Yeah.
if you're not, the doctor not telling you it's a girl or it's a boy, it ain't whole life. You
Yeah.
didn't miss half your life. So some things we have to think about
Yeah.
before we jump into it, and then we get so far in it and we realize that we didn't got had.
Yeah.
yeah.
That's all. There's a question on here. It said, did Rochelle state that your mutual fund agent is responsible for moving your investments?
Did
Yeah.
I say?
Did you state that the mutual fund agent is responsible for moving your investments? The
Not
client's investments.
Show where to move your money so that it continues to stay stable.
Yes. Yes. So the agent help you facilitate moving it, but we do have partnerships that manage your actual investment piece.
Mhm.
Investment stock. Yeah.
Okay, because everybody need a guide. Because we're
Yeah.
not smart in all aspects. So everybody has a
Guide.
road that they need to travel.
Yeah.
That ain't my road. So then
And you
I
know
have to
what?
go to people.
That's a huge reason as to why a lot of people don't invest or maybe don't have policies because
Yeah.
they don't understand it. I'm the first to tell you, it is a lot of information. It is. But that's why you want to sit down with a professional or someone who is licensed and who has that education so that again they can guide you and ask you, hey, what do you want? What do you want beyond this policy? How do you want this policy or your money to work for you? For some people, it could be I want to save the money to buy a house or buy some property. I want to save the money for when I retire. I want to travel. I want to
Yeah.
save some money to pay for my kids' college tuition. Whatever that looks like, you have to let the person who you're sitting before, let them know what your plan is, and they will figure out the best way to get you to it, right? With investing as little money as possible. So don't be afraid to ask questions. Don't be afraid to reach out. Don't be afraid to educate yourself. It is a lot of information, and nobody knows this because this is not something that we talk a lot about in our community, which is the main reason why I decided to get involved with financial services, because I wasn't taught this as a teenager. I didn't know nothing about saving money. I got my first credit card and racked the thing up. Went to the Brickyard Mall and saw that thing up because I didn't know, hey, you got to pay this back, right? This is going to impact you long term. So this is not something that we're talking about a lot in our communities. We're taught to work, make money, but not how to save money, not how to make your money work for you, not leave anything behind for your children and set them up for success, not how to, not have to work so hard because you have different vehicles that are making money for you. So that was the main reason that I wanted to get involved with financial services and mainly Primerica because they have a very good portfolio and very good options to help in middle income families. We don't come from money. We don't come from families that make 8, 10, 12 figures, right? We're hardworking day-to-day people, but we still have a chance. It doesn't take us out the game because we're not making billions of dollars a year. We still have ways that we can invest and save money also. So that's something that I do feel very, very passionate about. And I'm happy to be able to spread some of this education.
But it also helps people to relate to you. You know what I'm saying? So if I'm talking to somebody who understands my struggle, then you're able to relate to me and I'm able to relate to you.
Yeah.
You know what I'm saying? But sometimes, and I've talked to plenty of insurance agency, and at one time I was on the route to, do the insurance thing. But people look at you like, you should have been this way. No, I shouldn't have. We don't always get it. We don't always understand it. And that's why some of our college kids are in debt now, deep in debt.
Yeah.
Because nobody educated them on budgeting. And don't just go to school and get 1,001 credit cards. They're going to throw the credit cards to you. Monitor your spending. Absolutely. Because if it don't affect you today, it's going to affect you tomorrow.
Yes, it will.
Yes, it will.
So here's a question. Fidelity has a small fee to manage your 401k. Does your company charge a fee?
Yes, everybody do charge a service charge, a fee, depending on which portfolio or which investment you go in and how you want that fee to be allocated up front or towards the end. It is what it is called. It is a fee to manage your funds.
Meaning they charge me to move my stock. So they charge you to move your stock from one place to another.
Well,
Yeah.
depending on what investment you have with Primerica, it's a one-time fee depending on what investment you're going with. So we do a one-time fee. I can't get into details on all the different fees
Right,
based
right.
on, but yeah,
Okay,
you
but there are
one.
some companies, see, here is where the difference come in, because if some companies are charging on every little thing that they do, then that's something to take note of. And
Yeah,
if a company has a one-time fee, then
yeah,
that's something to take note of too. So you got to, it's a scale. Do I want to pay a one-time fee and I get all my needs met, or do I want to go over here and every time I do some, I want to pay a fee? Then I'm gonna move my stuff from every time I do something, I pay a fee to somewhere where I'm gonna pay a one-time fee because it end up being cheaper for me.
Because those
yeah,
fees add up.
They do add up.
They add
yeah.
up.
So
Yeah.
They do
yeah,
add up.
or you have to, get educated, do some research, educate yourself on what's out there. Take this live, you can contact us, ask questions. We definitely here to share this information. And what we do here, we constantly in training to learn on what's the best information that we can plug in or we can give out. And for us, we want to give you the best information, and what you do with that is solely up to you. But we want to make sure that we find many ways that you can allocate and grow your money, learn how to invest, and really get what is due to you in life, and being able to show you how to get there.
Yeah. Absolutely.
So Tammy, where we going next? You want to do the other slides, or yes or no?
I think we covered them. Actually,
Okay. Okay.
using the
Okay.
slides, we covered them.
Okay.
So yes.
The rule of 72, we covered the rule. What is it?
Oh, rule of 72. We can cover the
Yeah.
rule.
Okay. See, I'm learning.
We can definitely cover the rule of
Look,
72.
we're gonna get you in. We're gonna get you in here.
The rule of 72. So I'm gonna share this so everybody can see. The rule of 72. All right.
Tell me
So the rule of 72 is also known as the banker's rule. I'm sure most people have heard of this. But
no, I haven't heard of the banker's rule.
Not the banker's rule. The rule. So really, just think about it as it's telling you how long it would take for you to grow your money, right?
Mm-hmm.
So if we look at this slide, let's say the blue column at 3%, you invest $10,000 in stock, or sitting it into a savings account, or some interest-bearing account where you're not really growing as much money, right? How long do you think it would take for your money to double sitting in an account with bearing or earning 3% interest?
A long time.
What's a long time? Give me a number.
About 2 years, 3.
2 years?
Longer.
24 years.
How many?
24.
Oh, no.
Look at where this number grows. So you got $10,000.
Okay.
At 24 years, it grows to $20,000 sitting in a regular old savings account, like a savings account at Chase, a savings account at PNC, savings account at Citibank, right? A savings account really, you don't have that much interest. But I'm being generous here at 3%, right? That's being generous. So it would take you 24 years to grow your money sitting in a savings account to double your money. Let's look at the next column. Let's say maybe if you set your same $10,000 into an account that was earning 6% interest, that may be something more like maybe like an IRA almost, or say a really good credit union account, right? Credit unions tend to pay off a little bit more than regular banks. So let's call it a credit union account, right? Bell South or Credit One. You sit your same $10,000 into that account earning 6% interest. How many years does it take for that money to double?
That says 12 years.
12 years for your $10,000 to double, right? Now let's think about how you really want your money to work for you. The purpose of you making money is to make that money work for you, not spend your whole life working for the money, right? You want to be able to put your money or entrust your money into a savings vehicle where that money grows with you putting forth little to no effort, which is
Right.
like the mutual fund.
Mm-hmm.
Put that same $10,000 into a mutual fund. Again, right now the mutual funds are earning anywhere from 10 to about 12.5%. So let's
Mm-hmm.
say 12%. How long does it take that same $10,000 to double?
That's the green column. That's
The
20.
green
That's
column.
6 years.
6 years, right? So you see how you're able to put your money into a higher interest bearing account, make that money work for you, forget about it, let it sit there for 6 years, and it's going to double. You're paying yourself at this point. You're at $20,000 in 6 years versus $10,000 in 6 years,
Mm-hmm.
$10,000 in 12 years, and $20,000 in 24 years. So that's called the rule of 72. You divide your interest rate into 72 to find the approximate number of years it takes for your money to double. So maybe you're not investing $10,000. Maybe you have $5,000 and you want to invest. You can
Mm-hmm.
still take this simple formula and see how long it would take for your money to double. Maybe you got $100 put set to the side that you want to invest. You can
Mm-hmm.
follow the same formula and see how long it would take for your money to grow.
Mm-hmm.
Yep.
I could have been rich by now.
Yeah, we all could have. Okay,
Yes, definitely.
yeah,
Mm-mm-mm.
I
we
could have
all.
been rich by now. If I'd have got this, I'm 60. Oh, yeah. 40 years ago,
I
I
mean,
could have been rich.
you know how many $10,000 we've touched in our lifetime?
Hello?
How many times have we had $10,000? We got income tax, we got stimulus, we got all the times in our
Bonus checks from work.
exactly that we've had $10,000, or maybe not 10, but definitely five. We've all had $5,000, hopefully at some point. Think about
Right.
if you would set that where you would be now, right?
Mm.
Just
Right.
6 short years. And
Yep.
even beyond that, the longer you let it sit, obviously, the more it grows. You put some money in there in your 20s, and you're right. Look, 48 years later, where would you be?
$2,560,000.
Sitting
Yeah.
pretty.
I could have been sitting. I'm past 48, so I could have been sitting on two
Yeah.
million
Yes.
five hundred and $60,000. I
Absolutely,
could have built me a house from the ground.
Mm.
absolutely, and paid for the land and the neighborhood that it's set in too.
Hello.
I mean, and again, I know a lot of people think, well, 48 years, I can't think past today, right? But in order for you to get where you desire to be, you have to start thinking beyond today. Think
Mm.
do even if it's in short spurts. How much do I want to save in 6 months? How much do I want to save in 1 year? How much do I want to save in 2 years? Even if you do it in a short span of time, if that works for some people, like for me, that's what works. I can't think 10 years. I got to think 6 months, 12 months. So whatever worked for you, but start thinking a little bit more about what you want to save in your future. Make it easy for yourself.
Child, I'm
Yeah.
just I'm messed up for real.
Yeah,
Cause I could have been sitting on a pretty penny.
we
Mhm.
definitely all could have.
And
But
I hope it's a revelation to somebody who's at that age where we've seen some examples that you can start now so
Mm.
you can sit on that pretty penny.
yeah,
Whether
Yeah.
it's buy you a house or pay off your college debt or whatever it may be, it's something to think.
yeah. It's definitely never too late to start,
Yes.
so take some of this information and hopefully someone applies it. I mean, I like to think too about educating, like I said, people in our community, because in other communities this is how they use their vehicles and set their families up for success.
Exactly.
By way of life insurance policy, the grandfather dies, he leaves $500,000 to the kid, and now the kid pays off the house. The kid is set, right? Invest that money, and now that money is making money. So this is how other communities are thriving. This is how they
Mm-hmm.
set their kids and their families up for success. I want the people in my community, the people in my family, to get much better doing that very same thing. We have the same vehicle, we have the same knowledge and information. We definitely just have to take it and apply it.
Quiet.
And I want to piggyback on that and say it's never too late.
It's never too late.
Because sometimes we think that it's too late and it's never too late. It's never too late. So I hope that this has been very educational. I hope it has been very enlightening. And I hope we have a clearer understanding of insurance, mutual funds, RAs, and how they can work to our benefit. The goal here is to bring as many people as possible, whether it be real estate, credit repair, or whatever it may be, to get us where we need to be. This is the beginning of the year,
Yes.
and we have plenty of time to put our foot on the right path to
Yeah.
financial freedom. And that's the goal that we're striving for. We want to make sure that you understand. And again, I want to reiterate, no question is a dumb question. If it's concerning to you, it's concerning to the person to whom you are speaking with about your life and your well-being of life and your family. So just make sure you all understand that and share this stream with somebody in your family, your friends, or whoever it may be who may need this information, because a lot of people won't ask, but they will listen to some things. So I hope you take this information and you can share it. And I'm going to ask Tammy and Rochelle to give their information out so you can reach them. If you have further questions, you want to invest in a mutual fund, you want to get your life insurance policies together. So ladies, share your information.
Go ahead, Tammy.
I am again Tammy, and I will leave my number. Yes, I'm leaving my real number on this live. It is 773-619-8004. That's 773-619-8004. That is my cell phone number. My email address is shoe, SHOE underscore JUNKIES at yahoo.com. That's shoe underscore junkies at yahoo.com. If you have any questions, if you want a free quote, if you want to discuss what policy or setup or vehicle may be best for you, feel free to reach out to me, and then I will definitely share in my knowledge and help set you up for success.
All right. I am Rochelle Maddox. You can reach me at 773-951-5405. That number again is 773-951-5405. And my email is rmaddox, so RMATTOX at primerica.com. I'm going to give you that email again. It's RMATTOX at primerica.com. And you can definitely email me. That is my actual telephone number as well. Give me a call. I can definitely help you in any areas, definitely find you a best quote and well-being for you and your family. So we hope to hear from you guys.
All right, hold on, ladies. Well, I thank everybody for joining in and tuning in next week so we can continue this educational journey. All right.
I have to stop and thank you for this opportunity also.
Yes. Thank you for this platform.
Well, yes, thank you for this platform and allowing us to share in, this knowledge and educating and hopefully helping somebody.
Yes, highlighting women in business. We pushing women forward in 2021.
All
Building,
right.
bonding, and believing in sisterhood.
All
Hello,
right.
somebody. Yes.
Thank you.
Hold on, ladies. Well, that concludes another episode of To a Woman's Heart, where we uplift, motivate, encourage, and empower women. We do thank you for joining. Don't forget to follow us on all of our social media outlets. That is Facebook, Instagram, Twitter, Tumblr, and please do subscribe to the YouTube channel. I'm asking that every woman would invite a woman. Wednesdays, we will be back at 7:30 having conversations. On Tuesday at 7:30, we are highlighting women in business. And please do check out the website, toawomansheart.com. Let us spread love. We're walking in greatness this year, building, bonding, and believing in sisterhood, working on becoming our better, best selves. Until we talk again.